Treasuries, where are they going next?
Well, I think you've got a concern here that a lot of people are saying, well, you know, fair value for the Treasury is 4.5%. Well, yes, in a perfect world where economists run everything, fair value is 4.5%. But sadly, we're not in a perfect world. Economists haven't taken over yet. And we have rigged markets. We have manipulated markets. You've got captive investors which are distorting the market. The Fed itself continues to distort the market. So I think that there is this disconnect between people who are looking at rather quaint old-fashioned models of fair value and what's actually going on. So I think we're going to hover around where we are, 2.83% as a general range. I think that's perfectly realistic.
Right, but Paul, at some point, and I'm not saying the economists will take over, but at some point we'll go back to a more normal world, right? Are we 2 years away from it, or is it going to take longer?
Well, I think it is a question about what is a more normal world. Will we go back to fair economic value for a Treasury? No, we will not.
Never?
Well, not within the remainder of my career, I don't think, and I'm hoping to be around for a good couple of decades at least. So the issue here is you've got regulation of the financial sector forcing people to buy fixed income. You've got changing demographics and certain pension funds forcing people to buy fixed income. You've still got central banks, not just the Fed. You've got foreign central banks who are holding reserves, more reserves than they have ever held in the past, and most of those reserves are biased to Treasuries. So all of this together creates a distorted market. I mean, look at the gilt market. When was the last time a gilt traded at fair economic value? Probably sometime in the mid-19th century. Yeah,
but the Treasury, I mean, I guess people are expecting more from Treasuries because they're Treasuries, right? Let me just bring you over to my chart, which, of course, the big question is this the end of a 30-year bull market? Do you see an inversion?
So I don't particularly see an inversion. I don't really care. Inversions don't tell us anything.
Do you think the Fed cares?
I don't think the people who know what they're doing at the Fed care, except there are some people in the market who fear an inversion. Right. So the only thing the Fed has to fear is fear itself. Because if some people get worried about an inversion, what that might signal, that might change their behaviour and the Fed might have to pay attention to that. But an inversion of the yield curve tells us nothing economically.